We just got some breaking news that you will want to know about if you own XRP. I'd like to talk about what the White House just said, some XRP numbers, and a 500x for XRP that's being thrown around. In this video, I'm going to talk about what needs to happen this year in order for that to happen. Let's start. Right now, there is a lot of noise in the market, but today we have something real that you should pay attention to. CME Group made a statement this morning that most people are not paying much attention to. That's not right. The CME Group isn't just another stock market. This is the world's biggest market for derivatives. This is where institutions, banks, and foreign funds live. And when CME talks, it's not hype, it's facts. These were their exact words. We've seen a huge desire for this regulated product since it came out in May. Are you ready for more than 567K contracts worth almost 27 billion yen or 9 billion XRP? Allow me to be very clear about something, as this is where people get lost. Futures don't directly raise the price of XRP. They don't. If someone says that futures are the only reason prices are going through the roof, they don't understand how markets work. Futures send a message. They send a message. They say that financial institutions are getting ready for XRP as a currency and are becoming more happy with it. Futures makes pipes. The water is not turned on. Because they need real XRP to be kept, spot ETFs are what make the water boil. That's direct demand on a source that doesn't change. This is the reason why what CME said is so important. They are telling the market this product worked, there is a need for it, and you should be ready for what comes next. That brings us to something I believe is very important for everyone in this space to know. You need to be a member of XRP Insider Elite to find out how to place yourself before this change is made public. Not only is this a membership, but it also gives you a full institutional breakdown of what's going on behind the scenes with clear graphics, premium research papers, and in-depth video walkthroughs that show you how the private to public transition works. Inside, you'll find the most important things to keep an eye on as XRP moves into its institutional phase, as well as how early investors are putting their money. It's in the message that's been pinned below this video. Okay, let's dig deeper. It's easy to see why so many companies are interested in XRP right now when you zoom out and look at what's lined up. Bitwise, CoinShares, WisdomTree, Canary Capital, and other companies have already filed for spot XRP ETFs. We know how this ends from the past. First, futures are used to check the market, and then spot ETFs are used to buy it. This is the exact plan we saw with Bitcoin. XRP is just coming late because of a fight between regulators, not because no one is interested. And now that those walls are down, the infrastructure is being carefully put in place. At the same time, both mainstream media and crypto media fully lie about what's going on. Today, news stories start to appear with phrases like Ripple co-founder cashes out again, or Chris Larson dumps millions in XRP. There you have it, how stories are made. The headlines conveniently leave out the fact that Chris Larson and other important players have helped fund and back what is now the world's biggest XRP treasury structure. Tens of millions of XRP have been invested for a long time. That's not a lack of faith, that's resolve. That's why it's so important to tell the difference between sound and noise. The real warning comes from how institutions act. The amount of CME is a warning. Filings for ETFs are a sign. The fact that custody facilities are growing is a sign. No matter how many times you see that on social media, none of that happens if XRP is dead or doesn't count. Stories are what lie, not markets. Let us now talk about what the White House said and why the market as a whole still feels heavy. The government shutdown has made risky assets less valuable. Talk of tariffs, a trade war, and uncertainty about global talks all make it harder for people to buy and sell things. This isn't just true for XRP. It can be seen in stocks, coins, and commodities. Providers of liquidity pull back, algorithms lower exposure, volatility drops, and price action stays the same or bleeds. That is the type of place we are in now. But today we heard that President Trump will meet with President Xi Jinping of China next Thursday. We also heard that Scott Bessent, the Treasury Secretary, will meet with the vice leadership of China. The markets care about these talks because they look to the future. Before possible changes, they don't wait for reposition. When there is no longer a government shutdown, trade is clear, and global tensions ease, liquidity is released, and when the money comes back, it doesn't come back all at once. It jumps right into assets that are already set up structurally. One of these things is XRP. These are the points where the 500X starts to come up in the talk. It's easy to make mistakes with numbers, so I want to be careful with this. A move of 500x doesn't just happen because of one ETF or one news story. There needs to be a chain response. These claims are not made lightly by people like Jake Claver, who has been in this field longer than most and knows how global banking works. I think he means systemic changes, not just bullish cycles. When he talks about extreme upside scenarios, you're talking about very big events when you say a 500x move will happen in a year. There is a lot of stress in the bond market right now. You're talking about problems with the usual ways of getting money. It sounds like you're talking about carry trades ending, leverage snapping, and money running away to alternative payment assets. You're talking about situations where the current financial system is clearly broken and money is looking for faster, cheaper, and more fully connected alternatives. That story works with XRP, but only in those situations. That's why it's important to tell the difference between chance and probability. Is it possible for the price of XRP to reach 100% over time? Yes. Is it possible that ETFs will push XRP much further than most people think? Yes. But for XRP to reach 4 figures in a single year, a lot of things would have to happen at the same time that aren't just news about crypto usage. It would mean that something else is broken. Some people think that will happen in the long run, but it's very hard to say what year it will happen. That which we can already see taking shape below the surface is much more stable and, to be honest, more important. XRP is being marketed as an asset that can be quickly sold, not as a toy for speculation. Futures traffic shows that institutions are still interested. ETF papers show that long-term demand is still planned. Regulatory transparency is getting better. Global payment routes keep getting bigger. All of this is going on in the background, and prices aren't moving much. That space between things is exactly where long-term possibilities begin. Even though there is a lot of unpredictability, limited liquidity, and fear caused by news stories, the structure keeps getting better. The lines are being put in, the tracks are being checked out, the important people are getting used to things. There is still a lot of uncertainty in the market, but XRP is slowly but surely making its way deeper into the financial system. It is doing this without any big events or requests for permission, and this is where the talk naturally changes from what people think moves markets to what moves markets, since the next piece of news is much more important than short-term candles right now. Institutions are keeping an eye on policy, liquidity flows, and regulatory stance while everyone else looks at 5-minute charts. There is where the real story keeps going. Washington has changed its tone in a small but important way over the last few days, and this isn't being talked about nearly enough in the crypto realm. Behind the scenes, the White House has been sending signals that they want to focus more on cross-border planning and keeping the economy stable. That's not all that's being talked about when you hear about talks with China, Treasury officials, and trade representatives. This is about the flow of money, the risk of settlement, and the availability of dollars. It's not falling apart, but the world financial system is under a lot of stress. There is a lot of sovereign debt, yields are still changing a lot, and people are losing faith in traditional settlement methods. When that happens, assets that can move value quickly and effectively become strategic assets, not just chances to make money. XRP keeps popping up in places where most small investors aren't looking because of this. Payment lanes are still quietly growing. Tokenized settlement systems are still being tested by central banks. On-demand liquidity methods are still being tested by financial institutions. None of this causes prices to go through the roof right away, but it does make things necessary, and long-term demand is driven by need, not hype trends. But at the same time, regulations are changing in ways that are good for XRP. The tough enforcement-first method that was popular for a few years is starting to fade. More people are talking about crypto assets, making rules, and recognizing that they are not a single thing. In particular, XRP fits into a group that regulators are becoming more familiar with. Digital assets that are based on utilities and are made for payments and settlement. That difference is important, especially since talks about spot ETF are still going on behind closed doors. Whenever we talk about ETFs, it's important to know how these things work. There is no such thing as approval, market maturity, liquidity depth, custody solutions, surveillance sharing deals, and derivatives. Markets are some of the things that regulators look at. We're back to CME now. That volume in futures isn't just amazing for the news. It does what it says. It shows interest in the market. It shows how prices are found. It shows involvement at the institutional level. All of those pieces of information make the case for spot goods stronger. Spot ETFs don't just bring in retail money when they come out. Pensions, foundations, and funds that can't deal with self-custody crypto or offshore exchanges are drawn to them. Even small amounts of XRP from these groups add up to huge amounts of capital compared to how liquid XRP is right now. This is why the changes in availability are so important. At large scales, XRP is not always liquid. Prices change quickly when demand goes up. That's not just a guess. That's how markets work. Now put this on top of the big picture. Providers of liquidity are still being careful. The government shutdown has made things unclear. There is risk in trade talks. But markets don't always stay tight. It lets go when the pressure builds up. Capital moves quickly when it comes out. We've seen this many times in the past of the market. The assets that already have a place, are compliant, and are integrated are the ones that gain the most. XRP is one of the few digital products that meets all of these requirements. Goods. This is also why it's getting more and more dangerous to ignore XRP based on old stories. The old ideas that XRP is controlled, useless, or doomed by rules are no longer true. A big part of that fight is over. Now action is all that's left. Can XRP grow? Can it handle the sound? Is it possible to connect it to older systems? This is being done right now through pilots, corridors, and production use cases, not through marketing efforts. And this brings us back to the talks about the high upside. Analysts aren't talking about shopping FOMO when they talk about big moves. They're talking about raising prices. When an object goes from being speculative to being useful to the whole system, this is called repricing. Gold has been through this. Bonds have been through this. This was a time for everyone, even Bitcoin, because XRP is still early in this change. There is still a lot of instability and mixed feelings about it. Repricing can be very bad if something in the financial system as a whole breaks, even if it's only for a short time. There is no need for permission for capital. It wants safety, speed, and to know what will happen. In that case, XRP's function as a bridge asset becomes very important. That doesn't mean everything is changed right away. It means that it can handle flows that were not possible before. That's how exponential changes happen, not through hype, but through infrastructure that meets needs. The market is stuck between being afraid and getting ready right now. Fear is all over the news. Serious players spend most of their time getting ready. This gap between us is annoying, but it's also where chances lie. People who are waiting for complete clarity usually show up late. People who are interested in changes to structures get there early, and XRP keeps getting stronger from the inside out. More control over exposure, more involvement from institutions, more important for geopolitics, more inclusion into talks about how payments will work in the future. Not one of these things guarantees a certain price by a certain date, but compared to where XRP was a few years ago, they make the range of possible results much wider. As the market goes forward, the next big events won't sound like sirens. They will come in the form of filings, talks, pilot programs, and changes in cash flow. There will be no change in price before the event. It always works that way. As we move through this time of uncertainty and suppression, the groundwork for what comes next is still being made. XRP is right in the middle of these changes, quietly absorbing significance while the rest of the market fights over stories. This is not advice about money. The amount of debt around the world is getting harder to ignore. Governments are extending their debts at higher rates, their balance sheets are getting thin, and people don't have much faith in their ability to stick to their long-term budgets. It's not a coincidence that central banks and Treasury officials are talking more about planning for the worst, security and coordination. It's getting ready. And while the system is getting ready, assets that solve real problems are more likely to be brought closer to the center than pushed to the edges. This is where the situation of XRP is very important. XRP is not trying to take the place of money. It is not trying to take down central banks. It's made to make moving value between systems that already exist quick and easy. That makes it acceptable in politics and good for business. It's becoming more and more important to have that usefulness as cross-border payments, remittances, and settlement efficiency are looked at more closely. This change in attitude is becoming more and more clear in the news from policy groups. Also, the amount of danger that institutions are willing to take is changing. No longer do funds wonder if digital assets will be around in the future. They want to know which ones will be able to handle regulations, grow when needed, and work with existing systems. XRP keeps coming up in those talks because it has already been tested under a lot of legal and technical stress. That's a lot more important than how people feel on social media. How cash is being handled behind the scenes is another important change that needs your attention. Big teams don't go after green lights. During times of uncertainty, when there isn't much going on and stories are bad, they build their positions. The CME data, ETF files, and growing custody options all show that people are accumulating, not distributing. This doesn't mean that price will quickly show that behavior. It means that supply is being taken in quietly while the market as a whole is busy with other things. It's important to know the difference between not believing something and not being ready for it when the subject of extreme worst-case scenarios comes up. A lot of people don't pay attention to big numbers because they are based on current prices. But markets don't move in a straight line. They move in groups. When the basic beliefs about an asset change, this is called a regime shift. A regime change for XRP would mean that it is seen as important financial infrastructure instead of a speculative token. That change doesn't need to be agreed upon by everyone. It needs to be taken up by the right people. If macroeconomic conditions get even slightly worse, there could be a huge increase in the need for quick payment. There are pressure points when the bond market is under a lot of stress, when currency pairs are volatile, or when there are problems with correspondent banking. XRP is made to ease those pain points, and when systems are under a lot of stress, people quickly accept solutions that work. This is why being ready is more important than times. XRP can move even if nothing breaks. You just need enough wear and tear on the old system and faith in the new tracks. Most people don't understand how close we really are to that line. The building blocks are there, the rules are becoming clearer, the access to institutions is growing. Those are not new ideas in theory, they're taking place now. A slow shift from skepticism to practicality is what we're seeing happen. At first, some people said XRP wasn't useful. That case isn't as strong as it used to be. After that, they said that rules would stop it. That case is lost. The last kind of pushback is psychological. It's hard for some people to understand how quickly relevance can turn into repricing. History, on the other hand, shows that markets move quickly and fiercely once that line is crossed. Price is not the most clear sign. It's how they act. When big banks stop arguing about whether an asset fits in the system and start planning how to use it, the outcome is no longer an if, but a when. That's where XRP is right now. It doesn't matter what the short-term numbers show. Each quarter brings more integration and wider recognition. As we look ahead, it's possible that clarity on trade, talks, and more money could speed things up, not because they raise prices directly, but because they take away things that hold prices back. When there are no limits, capital moves to places where it thinks they will last and work well. XRP gives you both. And in markets, long-lasting and effective work together is a strong mix. This is the kind of change that doesn't just affect a price tag, but also how all the big banks work. A permission domain will go live, and the liquidity from private systems will join with the public ledger. At that point, XRP will finally be able to work as it was meant to, as the backbone of global value exchange. Then we'll be able to tell the difference between those who watched and those who were there. History doesn't reward people who just watch. It rewards people who took part and understood how things worked before everyone else did. And if you get that, you already know what kind of time we're in. You should look into the XRP Insider Elite if you want to learn how to get ready for that shift and why things are happening the way they are and when they are happening. With pictures, papers, and a step-by-step explanation of how this change is being made and where it's going next, it breaks down the system in great detail. It's linked in the message below this one that has been pinned.